Well, TCS is going to be the stock of the day, so let's hop across to Rima and Lata. They are speaking with the top brass at TCS. Over to you guys.
Yes, the big news, the earnings season has been ushered in by TCS, and to be fair, it has been a beat across all parameters. Whether you look at rupee revenue, dollar revenue, EBIT, profit, it's been a beat. So congratulations, Rajesh and NGS, for joining us. From me and Rima, first congratulations, but we are going to ask you the more skeptical questions first. It's sort of take away from the performance. Well, Rajesh, the big question that every investor I spoke to yesterday was asking me, please ask Rajesh, how do you look at the downside scenario? You did say that your clients are looking at scenarios. What exactly do you mean by the downside scenario?
First of all, welcome Lata and Rima. It's a pleasure to have both of you back here with us, and thank you for having us on the show. As I said, this has been a good quarter, and we have always been focused on staying very close to our customers and staying very close to the opportunity spectrum. And it's like driving in traffic. When you look at it from a distance, it looks all very, very crowded. But when you drive on the ground, there are enough spaces in between. And if you drive straight, you will, pretty much drive safe and go far. And that's the perspective with which we have always gone to our business. So I know that there's a lot of questions about the macro, but we are not well placed to actually comment on it. My only thing would be that to look at TCS not as a proxy on the macro, but evaluate it from the lens of a good business run well. And towards that, even though I say myself, I have no doubt that on behalf of all my colleagues, we can say that we have done a commendable job, and we stay very focused on doing that. So our ability to comment beyond that is limited, and there's nothing incremental that we can add to the spectrum of commentary that is out there about all the various scenarios and all the positives, negatives, all the stuff that. So I would like to hold back on that.
Okay. No, I'm sorry. I'm persisting only because I want to get some color. You may not be able to give numbers, obviously, but you speak to really a large segment of, BFSI, retail. So if you can give us some color on what exactly did your clients tell you? Did they say, we cannot speak much about Q1 next year? What did they tell you? Any verbatim quotes without naming the clients?
Well, Lata, we called it out last quarter also. We said there is an increasing cautionary tone in our clients' discussions. That is not resulting in a project cancellation, or they're not saying that we are at panic stations. But there is that caution, and people asking around, what are you hearing from others? Actually, a lot of that happens, that you're saying we have an order backlog, but what are you hearing from the others that you are meeting? And that kind of a drumbeat is building up. From our perspective, when you go into a planning season like the next few months, with that as the backdrop, the chances are that the next year's plans are likely to be weighed on the downside. That doesn't mean that people are not in an active, cost management phase yet, where they're pulling back significantly. It is just a question of how they are reprioritizing. So even if you look at cloud, there was a lot of enthusiasm on cloud from the board level onwards. Now, if you look at the news flow over the last 6 months or so, you would find that a lot of that has gone off the radar. Right? We are now into the trenches of actually executing on many of the things that were spoken about. And that's a good space for us because, yes, you lay out the future roadmap, but the hard work needs to be done. The first 20-30% gets shifted. But the real difficult area and the place where we differentiate ourselves the most is when you start getting to the next 30% and the next 30%. That's when the heavy lifting starts. And like in any other business, typically the value realization is always at the tail end of any such transformation. The first 1/3 is cost burn, or rather you're investing. The value realization comes at the bottom end.
That's probably the tailwind.
That's the one. So news flow goes away, excitement goes away. That doesn't necessarily mean that business goes away. It goes into the trenches, and I think we are well positioned to be able to execute on the actual value of the transformation that we still believe in.
Got it.
But you need to get those workloads in there. You need to get the refactorings done. You need to run the optimization to be able to capture the new dynamics of the new operating environment. Then you will realize the benefits.
Fair.
And I would say that as we look forward into the next 6 to 12 months or 18 months, we are going to go to a period of execution focus, of operational rigor, of not about news flow, but about actually getting the work done. And that, I believe, is TCS's sweet spot.
Fair.
And that's where we believe that, yes, we need to be vigilant. Yes, we need to be. But overall, I think that we are in a good place. We have a credibility with our customers, and their plans, we have not seen them pull back. They have stopped talking about it, but they're not pulling back because it needs to get executed.
Okay, got that. But your raw material is still manpower. And, NGS, the latest employment number we got, unemployment number, as low as 3.5, it's never been so good for the American worker. Now, your, on-site workers would be about 25-30%. Won't that continue to be expensive? And, higher attrition and therefore higher wages and therefore a problem for margins?
I think, all said and done, all on-site markets, right, whether it's US or Europe or UK, they are supply constrained. Okay. So to that extent, depending on the quality of resources, people with the market knowledge, client knowledge, industry knowledge, they'll always come at a price point, right? So our model is about constructing a team of multidisciplinary skills that are required to execute the project. Some are on a high-cost location, some will be on a low-cost location, so that the overall value proposition from a cost perspective as well as from a technology perspective is attractive, and at the same time it is it comes without any added risks to the project of execution. I think we have been doing that very well. In a way, that's our secret sauce, right?
Yeah, but it's not you don't expect it to tell on margins. You were very confident about 25% margins by the end of the year. And I think Samir even said 26 to 28 is very much on the anvil. But it has to get postponed, isn't it? If labor is so scarce and expensive.
See, first is that, it's about being closer to the client. And what promises that we are making on every execution, make sure that is going well, right? And in the process, there is an operational rigor that ensures that we do it without wastage, without taking unnecessary risks, and see how much of automation can be done, how much of predictability that can be brought into execution, so that we deliver well. And once you deliver well, and you know how to take the juice out and actually to deliver the margins that we need out of that project.
Rajesh, could you tell us, in the current quarter, which were the segments, pockets where you saw growth moderation? You spoke about insurance, but were there any others? And a follow-up is that in a downside scenario, which other segments would get added to that?
Riva, good question. So insurance, as I said, was the reason we called out is that insurance was the only weak segment in the US market, and that to PNC insurance. And we are giving that it's not always green, there will be pockets of weakness. From what we are seeing in the macro, this time the weakness is likely to come through from the manufacturing side rather than from the financial and the services side. So the GFC, the weakness came first from the financial and the market side. In COVID, it came from travel industry, those kind of ones. This time around, if the weakness starts, it's likely to come in from the manufacturing side. As energy, supply chain disruptions start. So we need to be wary of that. Within that spectrum, we see US manufacturing doing very well. We see some amount of caution on the European manufacturing side, and that bears watching as to how that plays out. And we need to be careful about how we are positioning on that. So it goes back to, again, that it's not a macro game. It's about what is our exposure, how are we doing, and within that setup, what are we doing for those customers, and what programs are we engaged with, what's on the pipeline. Even going back to the point that you just discussed with NGS, the on-site labor needs to be seen in the context of our requirements of what we were wanting there.
Yes.
In a scenario when there is a lot of excitement, especially at the senior most levels, about some technology, new technology, speed becomes a big part of the value. People want to show something very fast, 30 days, 90 days, the board is interested, everybody is excited. The speed of execution rather than the certainty of execution or the optimization of execution becomes the bigger commodity. At that time, you need to become a lot more dependent on quick turnaround, close contact. I believe that we are crested that wave. And because there are no new technologies we are speaking about. Cloud we have been speaking about for the last 2-3 years. All the excitement is now settled in.
Yes.
Now comes the actual work. That work can be optimized in various delivery models. So it's not the same labor scenario from a demand side that we see into that market. So the game has to be played, based on where you are and what the pathways available to you are. That's why trying to reconcile that with the zoomed out macro is a very difficult task. 3.5% unemployment on a 125 million workforce is still quite a lot of place there. So we don't need that. We need a few hundreds and thousands.
And just one question. Now, everyone's looking ahead to January to get clarity on next year's budgeting cycle. But if there is so much uncertainty, is there a possibility that we will not get an answer in Jan? Your clients may defer the budgeting cycle by a couple of months, maybe 3 months, maybe 6 months. Is that something your clients are telling you?
No, I think most organizations that we work with, especially the large ones, they have a very rigorous process of planning for the future. Within that, with so much of uncertainties, at best, their planning horizon can get shortened to, let's say, every quarter and adjusted on a rolling basis for the subsequent quarters. From our interactions, what they have been telling us is that, look, the programs that you guys are executing, some of them are long-term, some of them are short-term, but then there is no pressure on those programs. Okay. When we ask them, are you going to cancel any of these programs, right? Resounding answer we got from our clients is a no, right? So which is giving us some comfort in terms of at least, the next 2 quarters, I don't see any big issues.
What about embarking new programs?
The new programs, especially the long-term commitments, we see some softness, right? If we are talking about, let's say, a multi-year execution kind of a programs which we typically deal with, there is some amount of softness, some amount of, decisioning might get deferred, right? If I can use that word. But it's a function of, how this next 3-4 months is going to pan out, especially from a European perspective. If there are going to be energy crisis, if there are going to be factories are going to be shut down, and so on and so on. And then the other thing that we are also hearing is that, look, there is a recession or there is a inflationary pressures. If I'm going to get some costs because of that, should I be passing all the costs to the consumers, right? Some of them feel, no, they have an obligation, a societal responsibility not to pass on all the costs. So they're doing all these scenarios, right, in terms of figuring out how that should be.
Are they asking you to bear part of the cost burden since they can't pass on the entire amount? And then what does it mean in terms of price increases?
Is there a sense that billing could be a...
No such discussions have taken place. But then, our model is always to be with the client, closer to them, react to situations, be with them in good times and bad times. Make sure that the overall long-term relationship is taken forward in the right direction. Okay. If it means that we have to give in to some of their requests, we will give in. But then, in this business, I've seen it for the last 4 decades. Whatever goes out comes back many times over.
Okay. All right. Well, we're going to ask you little more about the verticals. But before we get to that, Rajesh, we saw the Tata Group in a consolidation mode. 7 steel companies have come together Do IT companies also come together?
Yes, is much better.
No, between
but
the
I
two
think
of
it's
you.
more of, are we on the same value?
LXC and Tata
I'm
Technologies.
saying-
Networks, and you're now heading Tejas Networks.
Tata Technologies. So
The question is, are you on the same value chain or are you on parallel value chains? We don't have a dependency on any either upstream or downstream.
Okay.
So there is no immediate impact from that perspective. From the perspective of whether it makes sense for both sides, that we can see. But unlike some of the other industries, we are not, on the value chain, we are not distributed. We have an end-to-end control over our value chain.
Okay, that gives a part answer. Okay, Rajesh, to come back to what Reena was asking about verticals, you spoke about insurance being lower. Haven't the BFSI clients told you that they have to be more cautious or slow down? I mean, JB Diamond was on our channel clearly saying that, he sees recession here and that's the biggest banker you get. Credit Suisse already having problems. So BFSI should have hinted more to you?
These large banks, their total spend in tech and ops is north of $10 billion. And we make maybe 100 million, a few hundred millions out of them. So what happens on the margin might have some amount of intermediate pressure, but it's not. So that commentary needs to be seen in the larger context of their business, whereas the value that we provide to them is across a full spectrum of both growth and optimization. So I'm quite confident that we have a value proposition in all scenarios. We have a value proposition in their growth scenario. We have a value proposition in the transformation scenario, in their compliance scenario, in their risk management scenario, in their consolidation scenario. So it's a question of being able to address that, and we have the credibility with our client base that we can have that conversations. And I think we are well positioned, and our clients also understand us well. And we are fairly, focused on who we are and what we do. And I think that has resonance across the full spectrum.
So insurance and manufacturing, you said, not so much BFSI you would mean in terms of a slowdown next year.
Capital markets are volatile. They will be the first to react.
Yes.
But the question, what I said, as an industry, it's unlikely that capital markets can survive even if trading goes down 50%.
Sure.
This deal win guidance, quarterly run rate of 7 to 9 billion, is it only till FY23 comes to an end, or do you think this is a sustainable medium-term kind of a guidance?
I think it is sustainable. And we should be, both it is sustainable and we should be targeting that to maintain some momentum. But that 7 to 9 is a comfortable band for us.
Would you fear it could be on the downside of the 7 to 9, considering that people are taking longer to decide, which is what you said?
Overall, our qualified pipeline as well as the overall pipeline looks good. Right? We are working on a mixture of deals, and it's broad-based. It's we have deals coming from emerging markets, new growth markets, as well as the established markets across verticals. It's not that, look, it's concentrated in one vertical and not in the other. So that gives us the confidence and comfort that, yes, we are in the right track. We have the products and we have the services footprint to actually convert them and as we move along. And I think 7 to 9 is a good range to operate in at this point in time.
Just one more question about this possibility of discounting. I know you have long-term relationship with clients, you treasure it, you value it, and therefore in hard times you may have to give discounts to your clients to support them. Are there more instances that TCS or the tech industry has to give discounts today because of the way macros are unfolding versus, say, 6 months back or even a year back?
I don't think so. I mean, we are not in a... see, it becomes material in a scenario like COVID, when there is a sudden downturn and there is across the board pressure, then these things become material. Otherwise, in the regular, ebb and flow of business, some things will be given, some things will be taken. That's okay. That's the normal flow of things.
So nothing unnatural in terms of discounting or price increases?
Okay. Rajesh, do you think more generally, not related to only IT industry, investments in blockchain, which require a lot of money, even 5G for that matter, could that slow down because people are uncertain?
I see, you have to look at it from a perspective of risk capital. Risk capital towards some of these emerging technologies is likely to slow down, but some of the core investments in these technologies is likely to continue. Our participation is more on the core investments.
Okay.
Our participation is less on the risk capital. So from our side, I think the environment is likely to be a continued investment into blockchain, 5G, etc. Whereas at a market level, you might see a fair amount of volatility on risk capital coming into these areas.
Yeah, well, just a final question. You know, you said in a very, say, maybe a quarter ago in the interview that we are a B2B company and our goal, our vision is B2C. Any progress at all on that, NGS?
A lot of thinking is going on, for sure. And I think, you know, much of what we do can be repurposed. It's not impossible. But at the same time, if you look at our own the digital technologies, if we have to be relevant, you just can't operate only on a B2B basis. Our solutions that we are providing to our B2B clients, we have to imagine their business scenario on a B2B2C basis, right? In that context, that, you know, much of the solutions that we are delivering also attempts to on the consumer side of it. So wish us well, right?
Okay. Many congratulations, Rajesh and NGS. Thank you very much for joining us.
Thank you.
Thank you very much. Thank you.
Well, you heard it from the big bosses.